Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm talking to you today from the borough of Queens, as I usually do. That's in New York City. It is the 22nd day of November 2022, and I do want to start out today to tell you that there will be changes made to this show in the near future, and if you wish to keep informed about those changes, be sure to request to be put on our mailing list, the show's mailing list. And to do that, go to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com, and just simply give your name and email address, and we'll be sure to include you on our list to keep you up to date as to what is going on this show and beyond. Before I talk more about today's show, I also want to remind you that I am the editor of Jay Taylor's Gold, Energy, and Tech Stocks. It's a weekly newsletter that is focused mostly on providing research and coverage of junior gold and silver exploration companies, a few producers as well, but mostly exploration companies. And while the mining shares have been very poor performers this year as a whole, they do seem to be coming around a bit now, but many of the companies that I follow in my letter have had remarkable success this year towards establishing high-quality gold and silver deposits with the potential for very strong operating economics. And so, for example, today, one of the sponsors of this show and a company that I cover in my newsletter, Irving Resources, reported the intersection of multiple high-grade gold and silver veins at its historic mine site in Omu Project, that is known as the Omu Project in Japan. And I will be commenting more about this in my weekly letter this weekend, and Dr. Quinton Henning is scheduled to discuss the progress of Irving Resources on December 13th on this show when he comes on to provide an update on Irving. Meantime, for more commentary on Irving and others, go to my newsletter. You can sign up for my newsletter. Go to miningstocks.com to do so. I also want to thank our sponsors for making the show economically viable. Our sponsors for today's show: Irving Resources, Noble Resources, Gold Bull Resources, El Oro Resources, Reyna Gold Mining, and Timberline Resources. Again, some more before I talk about today's show. I'd like to mention an article by Stephen Lieb that I think is very much worth reading. It is titled, "Pace to New Global Monetary System Accelerates as War in Ukraine Heats Up," end of quote. I believe Dr. Lieb understands monetary and geopolitical dynamics far better than most, and I think actually he's on a level with Alistair MacLeod, in my view. He understands that the United States pushing the war against Russia is extremely destructive to the interest of the United States and even more so to Europe, and provides evidence that the U.S. is losing not only financially but also militarily. Well, that, of course, is contrary to American propaganda, but I think Dr. Lieb's views are very much worth the effort to read them. He believes that a new monetary regime is already starting to emerge, and that the canary in the coal mine will be that the canary in the coal mine that will signal a new monetary system, signaling the end of the current dollar-centric unipolar world, will be a rapidly rising gold price. To access this very important article, I highly recommend you read it. To easily access it, you can go to jtaylormedia.com, where an overview and a link to that article is prominently displayed on the homepage. Well, I've titled today's show, "Bitcoin, Bonds, or Gold? Which is the Best Safe Haven?" John Rubino, Michael Oliver, and Michael Spreadborough return as guests today. The man known as the Big Short, Michael Burry, who became famous for foreseeing the 2008 mortgage crisis, tweeted the following on November 15th, quote, "I long thought that the time for gold would be when crypto scandals merge into contagion," end of quote. Burry was, of course, referring to the FTX debacle, and I am anticipating that John Rubino will help us understand how and why the cryptocurrency markets are imploding at this time when he joins us in the second half of today's show. Well, history shows that elite members of society who are worshipped as gods can be counted on to lead nations down the path of destruction, and almost always leads them to carry out immoral acts that end up biting them in the posterior end. That seems to be what is happening now to the founder of FTX, as he spent millions of dollars of other people's money to buy legislative influence from politically elected lawmakers. We can hope and pray that the same happens to all the existing greedy Americans who are, well, clandestinely, actually, no fault of their own necessarily, but they're using an immoral money, a money that allows the holders and the people that own a lot of it to use use it to redistribute wealth into their own pockets and out of the pockets of the people that actually create the wealth. I like to say the miners, the manufacturers, the farmers, and the inventors, the people that actually do things, and it seems to be siphoned off to the banking class as well as the political class. And we can thank President Nixon for what he did in 1971 for the monetary system that we currently have and the one that I believe is leading us down the road of destruction. The infamous John Law, known for his orchestration of the Mississippi bubble debacle, comes to mind when I think about what's going on in the U.S., as Alistair McLeod has discussed various times on this show. But clearly the man who paved the broad road to destruction for the Western world at this time, where we're going now, is John Maynard Keynes, who convinced intellectuals that gold is a useless barbaric relic. And so for the first time in history, after Nixon removed gold from the dollar in 1971, gold was abandoned in the entire world as money in favor of money that government forces you to use at the point of a gun. And gold, which free markets always chose as money, was outlawed because it was and is honest money that governments cannot compete against, because governments, they legislate money that is used not to strengthen the democratic representative government, but towards more, not at all towards more representative government and equitable income distribution, but really to enrich their own private interests. And we've seen this happening increasingly in the United States over the last couple of decades. So now that both the dollar and cryptocurrencies seem to be on the road to ruin, a very wise independent thinker, as I just noted, Michael Burry, is suggesting it is time to trade cryptocurrencies and dollars in for gold, which, unlike the dollar and every other fiat currency in history, has retained its purchasing power for thousands of years. So in the second half of today's show, John Rubino will provide an autopsy of the crypto environment, and I can't wait to hear what John has to say about that. Help us to better understand what has really gone wrong there in the cryptocurrency markets. In just a few minutes from now, after our first commercial break, Michael Spreadborough will update us on the exciting exploration programs that are being undertaken by Novo Resources. But right now, I'm happy to tell you that Michael Oliver is back with me to share some of his latest thoughts about the future of cryptocurrencies, gold, and U.S. Treasuries. At least that's what I hope he'll talk about. Michael, thanks for joining us again.
Good to be back, Jay.
It's always good to have you, and it's always important to tell people it's olivermsa.com, where people should go to avail themselves to Michael's wonderful work. Michael, you've been rather agnostic when it comes to Bitcoin, and as a libertarian, you like the idea of being able to have the freedom to avoid having governments rob you of your wealth, and Bitcoin has had some appeal with regard to that. But whatever your personal preferences are, I believe you do track Bitcoin technically. What are your thoughts now from that vantage point?
Well, of all the markets we track, it's probably the one we've nailed the best ever since it started trading on the futures market, late 2017. When it hit $70,000 near there in 2021, when it dropped down to 55,000, we turned major long-term bearish. Okay, because we broke momentum trend structures that were not short-term things, but pretty long-term. You were talking about the gold relationship to, is it better than Treasuries, better than Bitcoin, right, and so forth. In December 18th last year, so 11 months ago, we put out a report showing the spread relationship between Bitcoin and gold, meaning, what it showed was a positive trend for Bitcoin to that point. In fact, to the point of 1 week prior to that report. At the week of that report, the momentum action of Bitcoin versus gold on a spread, measuring one against the other, broke down. In fact, it broke a 3-year uptrend on the momentum chart of Bitcoin. And at that point, it told us, sell Bitcoin, buy gold. If you put on a spread, in other words, if you want to take action, that it's time now to buy gold versus owning Bitcoin, or sell Bitcoin and buy gold at the same time, put on a spread, in other words, equal amount of assets. Bitcoin's dropped since that point in time. It was 46,250. Okay, we've been trading down to 15,000. Okay, now, so it's wiped off the page. Gold was 1802 on that day. The high last week was 1792. Right now we're trading about 1740. So gold's about 3% or so below where it was 11 months ago. It was down a bit. Bitcoin's collapsed off the page. You could do the same thing with T-bonds. T-bonds have broken massive trend structures that trace back more than a decade. And therefore, in our view, now I'll admit the possibility that Bitcoin can have an advance at some point down here, because, I mean, it's been wiped off the page. I don't think it's going to go to zero. Some of them might. And they do have a virtue, at least. I'm not talking about these companies that, the scandal situation.
Right, sure.
The unit itself is not infinitely expandable. So it's not like a fiat currency where they can just print it and print it. It has a limitation in growth. So it has that virtue. It's not backed by anything, but it does have that virtue in that it has a theoretically limited supply. So that's one of the virtues it has. But I will agree with what Michael Burry said, that it's time to do it. Well, we thought that 11 months ago it was time to make the switch. And sure enough, 11 months later, we've had a situation where you're down 3% on gold from that point, and Bitcoin was 46,000, now 15,000. So you do the math. I think that does help. It does help gold in the sense that, it wasn't, those other things weren't an alternative. And I think a lot of crypto buyers did think that. They thought it was, that's my granddad thought gold was good. He's an entrepreneur. We're going for crypto, and they were wrong. And I think gold will stand up. And you just noted in your introductory comments about the miners, they are really behaving well. And I think that the gold miners and silver miners, and the silver miners are beating the gold miners right now, just like silver is beating gold. I think it's a sign that scared investors who dominated those markets over the last year and a half are not scared anymore. If somebody's coming in saying, okay, it's now time. These miners aren't going to zero. It's time to get in. And they demonstrated it, and technically they look pretty good. And miners are up 3-4% today while gold's unchanged. So, it's a good.
Michael, I would just comment a little bit on your pick with Bitcoin and gold. You say 11 months ago you were seeing it was time to sell Bitcoin and buy gold based on your tech. And this is fairly typical. You're usually early in picking up the new trend, and you were right about that, as you just pointed out. And Michael Burry was really looking, I think, at, he said when the cryptos fail. So he's seeing what's actually, it was sort of in the cards, or what you were seeing in the technicals. Without knowing what it was, you were getting the signal a long time ago. And your momentum work generally beats usually leads the price charts. So that's another point. Before we run out of time here, I want to ask you then about the dollar, because as you've pointed out on this show in the past, one of the problems with Powell increasing rates more than anybody else, the dollar has gotten stronger versus the in the index. It's gotten a lot stronger, and that is causing all kinds of consternation overseas. Other countries that borrow lots and lots of dollars are really having a lot of pain in scraping up their currencies to buy the dollars to pay them back. And so what do you think is going on with the dollar? Have we seen the peak in the dollar? And might that
I think so.
Also have something to do with gold as well as Bitcoin or the cryptos and gold?
We signaled a sell signal based on long-term momentum when the dollar index cash dropped down under 111 area in the high 110s. Okay. After that, within several days, it dropped down to mid 105s. And since bounced back to the 107s. Right now it's 107.20. We think there's some trading support down around 103.5 area. I don't think it'll hold ultimately, but that's the next bounce point. But we haven't even gotten on the dollar index, hasn't even gotten down to next bounce point. But I do think the trend that we've seen over the last, especially since early this year, which affected gold, because the correlation between dollar index movements and gold is loose. Lately it's been tight, inversely tight, meaning the dollar goes up, gold goes down. But historically, if you go back and look, there are periods of time where you have multi-years of gold upside, and you look at the dollar, and it actually went up some too. So it isn't a good, perfect inverse relationship, although lately it has been. But the dollar, as far as we're concerned, is broken. There is a bounce point, but we're not even near it right now. We think we saw the top up there around 115. and right now we're trading 107.19 as I speak. So we think the top is in, and the question only now is what manner does it decline? And I think the central banks probably took action over the last week or two. I know that the Japanese and the Europeans needed, and the Brits needed to have the dollar stop its upside relative to their money units, and they probably intervened. I know some of them did. The question is whether we did or not, and I don't know that. It would have been the Treasury Department had they done it. I wouldn't be surprised if they were part and parcel of the intervention, because it was a dangerous tool. It was causing problems.
Big problems
in the bond markets. Yeah, the bond market has now become illiquid.
That's incredible. One of the largest, biggest, most important markets in the world. And I do distinctly remember, Michael, I don't remember which day it was. I looked at all of the, the charts of the currencies in the index, and it was about 9 o'clock Eastern time, I think, when each one of them took the same directional turn. Yeah. So it does. You could see that there was something going on. It wasn't just Mother Nature. It was some
after all, they're government instruments, so it's not surprising that government
not surprising. Around. Not surprising, and not surprising they want to get rid of gold too if they can. If they could, they would ship it to the moon. I think they'd ship all the gold on the Earth to the moon if they could, and get it the heck out of here so they could keep playing their games with fiat money. Anyway, we'll have to leave it go at that. Thank you so much, Michael, for your time again, sharing your thoughts with our listeners. Always greatly appreciated.